Cattle reaching new contract highs before pulling back, while grains in mostly lower. Michelle Rook is back with more in today's Markets Now.
Well, Thursday ended mostly lower with the exception of new crop soybeans. Tommy Grisafi of Advance Trading is joining us. And Tommy, as the day went on yesterday, it just looked like more of kind of a risk-off day in the commodities sector.
Yeah, so it's the haves and have-nots. If you're trading gold and silver and metals, it was a dynamic big up day. Cattle started up, traded lower, and the grains ended very sad. And there are people who are trading wheat, who are professional wheat traders, who are just absolutely dumbfounded by this move. Not only in the Kansas City wheat, but the spreading against the Board of Trade in KC. Folks up in the Northern Plains are very worried if they'll get it put in time. And it just proves, Michelle, that sometimes the fundamentals don't always match up with the futures price. And as you know, I think the last time I was on, maybe a month ago, the funds were a record short wheat, or real close, and they're probably still really short the Board of Trade wheat contract. Board of Trade wheat within 10-15 cents of being under Board of Trade corn when you look at the May.
So you may see, again, money going out of the commodity sector into the equities, so that money flow we talk about. The other thing we should talk about is the fact that we've had the bull spreads working, or the inverses in corn and soybeans, but that is about to change, isn't it? And that'll impact the cash price.
Very much. As soon as we get done with this taping, I'm going to send a text to clients again, reminding them May options expire next week, and May cash bids are going to change very much to July cash bids. What's that mean to the grower? 27-cent difference. May corn is 27 cents higher than July corn, and May beans are about 36 cents higher than July beans. Sometimes, as you know, farmers just look down at their phone, they look at their local elevator. You'll know when they've lost, maybe they're busy planning and they say, hey, white corn go down 25 cents today. And that's that switch of that May to July. So what we want you to do is obviously get some cash grains sold, use that money, buy an option. We'd buy a July call. That's the month 25 cents cheaper. And then take the rest of the money, send it to the bank, pay off your operating, or you could make 4.5%. So there's a big difference between making 4.5% and watching wheat go down 10-15 cents a day. And it would just be a horrible decision, in my opinion, if a farmer paid for storage to store a depreciating asset. They're really betting that commodity is going to zip up 30 cents in the next few months. And if that doesn't happen, Michelle, then they made a poor decision.
That's right. And a lot of elevators have already flipped from May to July, or rolled that way anyways. All right, thanks for joining us, Tommy Grisafi. We'll have more Ag Day coming up.
Interested in spending a day with a trader? Call Tommy Grisafi at 800-664-4383.